Hi everyone, Jenny here from the Proven Group, and we are excited to bring you the second of our series of webinars on multi-site franchising. So want to welcome you all here today, and I have a spotlight on the presenters to make it nice and easy for everyone to see. Just introduce myself, I'm Jenny, I'm from the Proven Group, and we are people and culture, all things HR, safety and wellbeing service provider. We work a lot in the franchising sector. We do have a number of people who have been exceptionally helpful. I might ask everyone to mute themselves if that's okay. Perfect, thank you. We do have a range of people who have been incredibly supportive of this event and were part of the first one. And so I will introduce them all very quickly. We have Belinda Fyffe from the Proven Group. We have Vanessa Wilmot from Geotech. We have Kate Groom from Franchising, Accounting and Tax. We have Ayesha here from Swoop. And we have a couple more on their way. so thanks everyone for joining today. We will move at a pretty fast pace. What I encourage you to do is put your LinkedIn details into the chat, ask questions, connect with each other, keep the conversation going. This is a starting point, probably more questions than answers that you'll come across today. Really, it's about sharing what works, sharing what doesn't work. One of the things I'm really passionate about is sharing those things that don't work so we can all learn from each other's mistakes and hopefully not have to make them on our own. And yes, so we'll get started. So I'd like to first of all introduce Regan Corbett from Quest Apartment. Regan, do you want to just jump on and share a little bit about the brand and about you?
Thanks, Jenny. Hi, everyone. So I work for Quest Apartment Hotels. We're probably one of the largest franchise network of apartment hotels across Australia and New Zealand. We've been established for 35 years this year, so we've been around for a long time and now operating under the Ascot Limited Group. So it's sort of helping us with our global plans moving forward. I think that's... Do you want me to get into more, Jenny? Or that's it for now?
That is perfect. Thank you. Thanks. Kevin, do you want to introduce yourself?
Yeah, so obviously Kevin from Churros. The business started in 2004, started franchising in 2006, and currently have about 60 odd franchises and looking at going to about 110 in the next 3.5 years.
Perfect, thank you. Venice.
Hi everyone, Vanessa here, the head of franchising at Rolled Vietnamese. So a bit about Rolled, what we do. Rolled has been offering fast, fresh and healthy Vietnamese food to Australia since 2012. Over 11 years of operations, we have opened 139 stores across Australia and currently working hard on the launches of the brand in other countries, starting with Singapore, New Zealand and France next year. My role with Rolled Vietnamese is acting as an absolute gatekeeper for the brand by recruiting suitable franchise partners to align with the business expansion in Australia as well as a global scale. So I have a privilege to work with the brand in the support office team while owning my Rolled stores as well, which means I am so lucky to working both as a franchisor and a franchisee, a multi-style franchisee to be relevant to this topic today. Thanks so much for having me. I'm excited to share with you all my stories and experience. And
thanks,
thank
Venice,
you.
Thank you. And everyone who's part of the panel brings something really different to the table. But I think Vanessa's really unique perspective is having that multi-brand ownership herself, and she'll share with us a little bit about that story and how it came about, because I think it's a great learning. Ryan.
Good afternoon, Ryan from BFT, or Body Fit Training. So we are about 5 or 6 years old franchising-wise in the group boutique group fitness space. Currently just over 250 studios across Australia, New Zealand, Singapore, Hong Kong, and also the UK. We are owned by a company called Exponential Fitness, which sit in the US. And yeah, so 250 openings in the last kind of 5 or 6 years. So yeah, lots of learnings through those experiences. Keen to share with everyone today.
I think, you know, it's great having some variation of very established and a younger brand, Ryan. And I think, you know, you're very open in sharing what's worked, what hasn't. So that, you know, I think people find that really, really helpful. Regan, let's start with you. You've got a very, very, you know, worked out and established multi-site franchise strategy that, you know, you've learned, you know, what hasn't worked and the strategies developed from there. Can you share a little bit about what your strategy is now, and maybe some of the things that you've changed in the process to make it more successful for you?
Sure. Yeah, there's been a few trial and error over the past 30 years. You're right. So we have quite a rigorous selection process for franchisees coming into our network, just for their first one, and that's now flows over to our multi-unit process as well. So over the years, given the size of our businesses and the price point, we've really we're now at a point where our franchisees can have up to 3 businesses, and we cap it at 3. When we see them go over 3 in the past, we see them straying away from our model, just because of the size and the dynamics of it. It just doesn't work for us. So that was a big learning. So it's been pulled back to 3. It wasn't just a number we randomly plucked out. It's what we sort of have learned over the years. Multi-unit is a really, really important part of our growth strategy. Like Kevin with Churros, we've got a pretty solid pipeline to get us to 200 properties in Australia by the end of the decade. So we need multi-unit to help that growth. Currently, we've got about 35% of our franchise network are multi-unit franchisees. So they have to go through a pretty rigorous process to get that second or third one, where if they're not achieving benchmarks, if they're not following our model, if they're not engaging in our network events and part of the community, guest experience scores, we go through a whole gamut of things before we'll even talk to them about the possibility of a second one or a third one. They also must be part of a partnership. And I think that's where we might be different from some of the other ones, where our model is the franchisees must be part of the business in some capacity. So if they have one in Sydney, one in Melbourne, they can't be. So that's why they have to have a partner, a minimum 20% stake in that business. So I think we've all spoken about it before, skin in the game, in the business, it runs far better. We know that, we've learnt that over time. But also partnerships are really tricky. And we've got some great stories about ones that, that have gone really well, but others that have gone really badly. So we put a lot of time and effort around those partnership agreements, who they're partnering with. The process that we go through to approve that is pretty stringent. And I'm sure the franchisees will say quite annoying for them that we put them through that process, but they thank us in the end. Nothing's for certain, but if they have everything lined up, you know, it's going to end at some point. But if it can end the right way, then that's what we're hoping to achieve with those partnerships. But yeah, that's essentially our strategy, if I've covered that all for you.
Yeah, that's brilliant. Can you maybe share with us, you know, I know that some of the partners come from within the group as well. Can you share a little bit about that?
Yeah, so we've got a couple of different ways. Obviously, people they meet people through the network that they form friendships with or business partnerships with that they want to expand with. But we've also developed to help the process an accelerator program, we call it. So that's for people that are working in a Quest business and they have aspirations to be a business owner. They're often experienced hoteliers. They can run a hotel. They're often a bit younger, so they don't have the financial capacity to potentially buy into a business. So they're looking for someone who can fund them in. So for someone who's wanting to grow to their second or third and has the funds, they can fund these guys into their business. They run the business for them. They might start off with 20% stake and then they grow their partnership that way. So we've got a pipeline. We try to get 8 through a year of our accelerator program. Again, we don't take everyone. They've got to go through a process. They have to pay to go in the program just to make sure we're getting the right people through. And so we do it that way to try and help form those partnerships.
Yeah, I love that. Thanks so much. I think there were just so many gold nuggets. If you do along the way hear something that you find really interesting, just put a little comment in the chat about your little nuggets, because then you can take those chat comments with you at the end. Yeah, thank you. Thanks, Regan. That was brilliant. Kevin, we might go to you now. You've also got a very robust and established multi-site strategy. Do you want to share a little bit about that?
Yeah, certainly. So very much like Regan, our franchise partners very much are wanting to grow with our brand. There's over 80% of our current franchise partners wanting another store to 2 stores over the next 2 to 3 years, which is obviously quite good considering the predicament a lot of franchisors can be in at the moment. With that being said, we do have a robust situation where they're not just gifted an opportunity when one arises, but they have to actually provide a business plan and cash flow forecast for the first 3 years to provide us with insight as to how their current business is going to operate with the new store, as well as how they're going to operate their new store as well. Once that happens, obviously it goes to our board of directors to review, and then obviously we interview them to finalise the approval process, subject to obviously the financial side of the business that they're currently running being or making money, and then obviously also ensuring that the operational component of their business is also up to standards as well.
That's incredibly helpful.
Yeah.
It's interesting because, when we were having our conversation, and Regan, if you can jump in here as well, what sort of percentages of people kind of put their hand up, start the process, and then, it's just almost too hard?
Yeah, we see, particularly with our greenfield businesses, so the ones that we build and we franchise those a bit differently to the brownfields, but we see, we've had the last few, we've had, up to 30 applicants put their hand up initially. And like Kevin, they have to come and pitch to us. They've got to do a 5-year business plan, a 5-year budget. We need to see their asset and liabilities, all that stuff. And we'll see considerable drop off through the process. But that's the reason why the process is there. Not just for us, but it's for them to really help them understand what this business will mean. If they take on the second one, they're like, even just about that business. So they're going through that process. That's why we do it. We franchise them a year out to really allow enough time to go through that process. So we'd probably see well over half drop off before they get to the final pitch. Yeah.
Evan, what about you? What are you seeing?
Yeah, very, very, very similar, to be honest with you. So there's one example where there was 5 existing franchise partners just for one site in WA about 6 months ago, pitching, and basically in the end it came down to 3 of them actually going through with it. And us having to obviously have meetings with each 3 of them, and then pitching their best case scenario based on all the presentation or all the presented items that they needed to give to us. And in the end, it just so happened that there was one existing franchise partner that beat out a new approved franchise partner, followed by an existing franchise partner. So even the brand new franchise partner that we selected had a better business case than one of our existing.
I think it says a lot for a culture of a franchise when you have so many existing franchisees who want to take on multi-site. So, you're obviously all doing something right here.
Jenny, can I just add in there? Sorry, Vanessa. I think it's really important because when you start to get that enthusiasm and people want to grow with you, there's going to be people that are disappointed because they miss out, and it's really important for us to manage that process so that they don't lose the enthusiasm, but also so we spend a lot of time after. We offer feedback. 99.9% take the feedback. Some don't, but they take the feedback to help them get ready for the next one, because it's really important that they don't. They might get a couple of knockbacks, to be honest, before they get one. So it's important to really manage that process all the way through to keep the enthusiasm going. Yeah.
I think probably, Regan, you and Quest and Centuro are quite similar in that you don't have like hundreds and hundreds of properties that you're going to open. So there's a lot less availability, whereas both Rolled and BFT, you've got a lot more opportunities, a lot more options. So it's a little bit easier to handle, that disappointment and you missed out on one, but you can get the next one and prepare yourself. So
Yeah.
I think that's a really interesting point. Thank you. Venice. And sorry, back to that point for a second. Sorry. I think that's a bit of a culture piece there as well. So I think if everyone's aligned and everyone understands where they're going and where the brand's going, and where they sit as part of their piece as part of the puzzle, I think that also helps as well. I imagine the way you move them along the whole process is really kind of sets them up to understand that's a possibility. Venice,
Yeah.
share with us what's the role strategy. I think do you want to maybe share with us first about your franchisee experience and how you multi-site, and then learn through that process as well.
Yeah, great. So actually, before I share with you the strategy that Ro has for multi-site owners, I think sharing my own story and the lesson from it is actually important. In the past 3 years, especially during the pandemic, Ro has seen many of our franchise partners put their hand up to become multi-site owners. We opened 35 Ro stores during the pandemic, and 18 of them was our internal franchise partners. So that was very incredible to have the trust from our franchisees. Here at Ro, we're always very proud that 48% of our franchise partners own more than one store. That means 5 out of 10. Some of them own up to 5 stores as well. We do have a king of a territory that have their 5 stores in Canberra. Been with the brand from the early days, to be exact, 11 years. I have been witnessing multi-site franchise partners who were struggling as well as successful ones as well. And, Ro has a period when we were aggressive with expansion. We still are, don't get me wrong, we still are very aggressive, but we learn from the lessons. And when we aggressively expanding, we tend to move very fast and we skip process sometimes. I don't, afraid to admit the mistakes that we made. And there were consequences that also impacted myself being the franchisee. So I became a Ro franchise partners in 2021 during the pandemic with the first store in New South Wales. And that was a massive success for me and my team. I was so proud of it. And with the, as a young person, very ambitious, like any other franchise owners, I put my hand up after 3 months. I said, I want another Ro store. The same state, but it's different location that require 2 hours drive. I don't really mind as a great locations. We had the beautiful opening with the great sales as well. And 3 months later, I put my hand up and I want another store with just carry on the success. And with that speedy expansion of myself and my business partner, I could see myself and my partners were struggling, and my team also very struggling from the franchisee perspective. That also makes me definitely see the same problems with other franchisees who expanded quickly like me. And from the franchisee perspective, because I'm lucky to wearing both hats, I definitely learned valuable lessons that I actually can apply to my own departments. And that made one of the most valuable lesson is the collaboration between the franchising team and other departments, especially the operations team. I could say the ops team is now our best friend. We can't work solo anymore. And with these strategies have been implemented since early this year, we could see the beautiful result from it, that we have a proper screening and support for our multi-site franchise partner. So, similar to Churros, we do have a process for the people who want to apply for the first stores and they want to become multi-site. The process actually becomes even more strict. So we communicate really often with the ops team on the weekly basis, and they let us know who had intention to expand. And we also let them know, yep, our franchisee have called me and they want that location by that time. We talk really often and we actually raise any red flags. And we will come and address the problems in the early days and support and map out the ways as a strategy of our regional manager to help our franchise partners to achieve their 12 months or 3 years goal. So to gain approval from Roll to become multi-site franchise partners, we definitely need vote from all departments, especially operations. So I can take you through a little bit of the steps. From the operations perspective, every month the regional managers, they do their short visit reports. This report is just a checklist of the compliance on our 8 non-negotiables, from the way our food display, the way the team dress in uniform, how the store presents, whether the food items are all available, the leadership presenting as well. And they have to pass that, we call it SVR, in at least 90% of the SVR. Same with and this is a long visit report that takes a bit more time and more involvement from the franchise partner as well. They have to make sure they also pass the food safety and payroll compliance to gain the approval for operations. And from the training perspective, they have to prove to us that their structure is well prepped for the expansion. If you unplug the leader from the store 1, will jeopardize your current business. So you have to prove and draw out the structure of your multiple stores. And every leader, including the franchisee, have to go through a strict training program that delivered by our training team. So manager have to go to the 8 weeks training, and the multi-site, they have already done the 8 weeks before for the store 1, so they have to attend another 1 week assessment to make sure that they learn to become their own regional manager. And then from the credit financial perspective, we're checking are they up to date with their royalties, marketing payments, the P&L's profitable, are they healthy, balance sheet, we all check all of that, and that was definitely done on the monthly basis by the regional manager. The legal team also jump into this game and make sure they let us know any legal breach, are they compliant with all the legal clauses in the agreement. Anything that showing red flag, we definitely talk again on the weekly basis.
Well, Venice,
yeah.
Wow, wow. Thank you for
Yeah.
going into so much detail.
Yeah.
We'll come back to some
Yeah.
of these points, because
Yeah.
I think you've brought up some really, really
Yeah.
interesting points. I think, what jumps out is the process. And ultimately, that's what franchising is. Franchising is a system, and you want to be able to replicate the system to make it work. And it sounds like what Roll's done is really looked at the system, communication, as Belinda just put in the chat, across all of the departments.
Yeah.
We're going to talk, we'll come back to it. We're going to talk about support for multi-site, because I think that's a really interesting part of what you've just raised here. So thanks, Venice. Ryan, last but not least, I think, we all know that BFT has experienced huge growth in a really, really short period of time, which is always interesting. Do you want to share a little bit about what's happened? What have you learned? Where are you at with your multi-site strategy?
Yeah, I feel like you've saved me for the last to share all the mistakes and lessons that we've learned along the way. A few things have come up so far that I find really interesting. We mentioned COVID, and I just thought back. Territory sales, really held the fitness industry in it. I think Ben's on here. Fitness was so hard done by through COVID. I know we all were, but territory sales, really kept fitness, BFT and probably franchising businesses alive. So, it was such an interesting time, because I look back and multi-site territory sales, were looked at as the golden egg, to be able to sell 2, 3, 4, 7 territories at once. And, everybody in the office is cheering and high-fiving. And then, kind of the reality kicks in that then you've got to get these open. And we've probably seen, limited success with that kind of, let's put all of our eggs in one basket and go to town. And what we have seen is if that first site or first two sites don't get off to a really positive start, it really makes those next territories difficult. And so that's probably what we're experiencing now, where we're kind of that 12, 18, 2 years out of COVID, and now the ability to get them open isn't limited, and so we should be opening some of those additional territories. We've talked about skin in the game, and we're a really kind of community driven model. It's not it's a relatively low member number, and having an owner operator we certainly see as advantageous in this business. And so that kind of limits sometimes the opportunity, because you can't necessarily replicate what you've done in one studio into another, because often it's one or two people that are really driving that community. Probably our most successful multi-sites are really the ones that have built the model. We've talked about process. They've built a successful studio. They've embedded really, really strong processes. They've learnt along the way. They've trialled and errored some things, and then they go to their next site. And whether that's a greenfield site or an existing studio that they're happy to take on from a current franchisee, they then go and replicate again. And so by the time they get into the third, fourth, fifth one, they're just constantly refining, iterating, and improving what they're doing, and having really, really successful businesses. But if you don't have those processes in place in studio number one, you're just creating more hard work for you and more errors in those studio number 2, 3, and 4. So that's kind of what we've seen. That the owner investor sit on the beach, drink pina coladas, watch the money roll in doesn't work in our model. I don't think it works in many models. But those that are close to the business, not necessarily maybe working in it every day, but those that stay really close to their staff, close to operations, are looking at the numbers, certainly are outperforming those that aren't. And some of our best multi-site owners are working as hard as they are today as they were 5 or 6 years ago, just to continue to keep growing the business. So I think we talked last week in preparation for today, and I see mistakes that we've made and things that we could do differently. But when you're trying to grow and expand at the rate that we did and have, and the interest that we had, particularly through COVID, we grew massively through COVID, particularly outside of Victoria. And so we take the good with the bad, and we're probably cleaning up a little bit of our challenges that we've created for ourselves now. But that's just the reality that we live in, and we deal with it, and we continue to learn. So
Ryan, thank you for sharing and being so open, because to me, they're the learnings. The learnings are from, we didn't do a great job. How do we get ourselves out of this situation? But I think you're very open to to looking at it and reflecting on yourselves and looking forward.
Yeah, Jenny, I was just going to add, at the end of the day, franchising works on a model that if our franchisees aren't successful, then we're not successful. And it's really simplistic when you look at it at that level, and ultimately that's what we have to drive. And if we're setting them up to not be successful, and I hear Regan and Kevin talk about, you got such strong processes to set them up for their next one, their third one, to be successful. And that's probably just the things that we're learning is making sure, hey, get number one right first. Show us that you're cash flow positive, you've got a balance sheet, your P&Ls are strong, and your processes are in place. Then we'll go and give you number 2, 3, or 4. So.
Love it. Kate, Groom, I can't help but bring you in at this point in the conversation. I'm going to just spotlight you for a second. Sorry to call on you unannounced. I'm sure you're always happy to be called on. Kate runs franchising, accounting and tax, and is extremely passionate about franchisee profitability. Works across a lot of franchise networks with a lot of franchisees. Kate, what are you seeing in terms of franchise profitability and the key factors that are going to help people be successful in number 2 and 3 potentially?
Yeah, thanks, Jenny. Well, firstly, I just a bit of throat clearing to start with, but As you know, I've worked on the franchisor side, and I've seen multi-units work and not work, and I completely agree that no matter how big their appetite for getting a second location, firstly, the first one has to work. Secondly, they've got to have a manager that they've trained up, that they can rely on, and they need to understand that just because you can run one does not mean you can run two. Two is going to be hard. Like, it's way harder when you can't see it every day, even if you've got a really great manager. So my experience is it's very challenging, and that there have to be hurdles to get in. You know, just because they want one doesn't mean that it should be the right decision.
Hey,
On the
sorry. Yeah, you go.
Just on the financial side of things, which is what you asked me about, there's a couple of things. One is that you have to have a actually truly profitable business, and that is not straightforward to see, actually, from a financial point of view. It's actually being able to discern whether the business is at its core profitable, and that profit takes account of all the costs that it needs to in the appropriate way, is quite a thing. And there's a couple of competing factors there which make it difficult, because for the last several years the government's allowed very aggressive write-offs, which messes with the numbers a bit. Franchisees have a tendency to believe the stuff they hear about being able to put their personal expenses through the business, which you actually can't, but they do. So it makes it complicated. But you've got to be able to see that there's profit. In this market, we need to understand about their gearing, because interest rates are now a lot higher than they have been, not just on business debt, but on personal debt. And so it's all well and good to see what's happening in the business, but then what else is happening is now a critical factor. And so having people think for themselves really clearly about their investment strategy, and that their choices between saying, will I buy an investment property or will I buy another business, they have to be clear about that, because if they've taken cash and used it to gear up somewhere else, then that's a risk for the business. So the financial side of that, I think, is way more complex than it has been, and way more risky. So we would assess the risk at the moment is higher than it has been in the last several years, because of interest rates, because of labour costs, which have dramatically changed the numbers for these businesses, and because the economy is a bit soft. So that makes it harder than in an up and to the right economy to make it work. So the financial side of things is not just about, I think, ticking the box on the bottom line, but making sure that they actually do have a really strong foundation for understanding their decision to be an entrepreneur.
Thank you. Thanks, Kate, for sharing that. So incredibly valuable. David, are you your camera off, but are you on? Put your camera on. Yeah, you are on. Okay, great. I just wanted to bring you up here. David is from Franchise Ready, and Franchise Ready work with new and existing franchises to grow the network and provide a whole range of consulting services, really, in franchising. David, what are you seeing? So, you know, Ryan said before, you know, you've got a new franchise partner who comes in and wants to buy 7, and everyone's screaming and shouting with joy. What are you seeing when it comes to this kind of multi-site strategy from quite an entrepreneurial franchisee up front? And Venice, I think you probably fell a bit into that category. You're very motivated and entrepreneurial and want to grow fast. But then you've got Kate's discussion about the profitability and the figures. You've got these kind of competing demands. Yes, we want to grow, but how do we make sure that the systems and processes, as Ryan said, are really down pat? What are you seeing? Because you just see so many brands in the market.
Yeah, sure, Jenny, and thanks for the intro. We have seen that a lot of franchisors, while they're really eager to grow, the whole multi-site piece is really sort of taken a bit of a back burner, and there's been a bit of the instance of, you know, crawl before you can walk. In actual fact, I had an interview yesterday where there was someone that was fairly cashed up. Didn't need to borrow a cent for 3 sites with one of our clients. And I think a large part of that interview or that discovery process was actually telling them why we wouldn't allow them to buy 3 stores and just focus on one and really analyse and go back and review the results after 12 months. And after the 12 months was only merely to see if the franchisor would then entertain a potential second site in that instance. We're probably seeing a lot amongst that with our clients that, gently approach when someone mentions the word multi. And also like what a lot of other people have mentioned, like Kevin and Regan, in the fact that, prove yourself in your first store and making sure that, you're totally compliant and profitable before proceeding with any further growth. And that's the advice we also give our franchisor clients as well.
Yeah, thank you. It's really, really beneficial. Thank you. Well, so many incredible insights. Regan, I'm going to start with you again. What I'd like to talk a little bit about is the support. So obviously as a franchisor, you're, one of the key things that you provide for franchisees is support. Multi-site franchisees often need something a little bit different to a single site. What, from that perspective, what are you looking at and how do you manage this internally?
I think once they're in and they've been approved, our support levels don't really change because under our model that they have to be a franchise partner in each business. So what our field, we call the FRM, so the field support managers, they might take on those multi-properties. So they're having we have monthly meetings with them on site, that they're across both. So they're also checking the financials across both. So to Kate's point, we have eyes over that. We have eyes across all the systems. All of our systems are connected, so we can see their numbers. They don't have to submit them to them. We see them. So I think there's more eyes on across the 2 or across the 3 that we're seeing, and they'll have that dedicated FRM working with all the partners in that business. It's also the requirement that the partners have to come to those meetings. So they might have to dial in, but they all have to be involved. So it's not just heavily relied on one. But I think it's about making sure that we have that transparency and that two-way conversation, the communication around how's it really going. They can tell us, but because we can see it, I think that's a lot easier for us. But for us, the support remains the same if they're single or multi because of our size. I think so only got the 3, but we're in their business with them every day pretty much.
Yeah, love it. Thank you. Kevin, what have you got to add to the support side?
So we've actually just changed a bit of the way in which we support our franchise partners now. So there really is a cross collaboration between the training team and the support team now, where they both share simultaneous roles where existing franchise partners, if they are struggling in certain areas, obviously they go back to the training department side of things to help basically close that gap from an operational standpoint. But from a regional operations manager who looks after the franchise partners on a daily basis and works in their stores on a daily basis, face to face with their managers and franchisees, they're looking at the numbers on a daily basis. So what we've done is we've essentially connected Spotlight reporting to Power BI. So on a daily basis, we get instant feedback as to the profitability of their business day in, day out. And it's all gets flowed through to the zero accounting software system that we help set them up with from day one of trade as well.
It's all about the systems, isn't it?
Yeah, it is.
Yeah. And then them learning how to use the systems effectively. So yeah, I mean,
that goes hand in hand too, Jenny, so much so that we even educate their accountants, and we have to approve their accountant as well before they come on board.
That's brilliant.
So even though it's a CPA, they're a CPA, that we need to make sure that the CPA understands how our business operates, the line items per the P&L as well, because we are looking at those spotlight reportings, on a daily basis, and then we print them out and analyze them every quarter as well, and we're literally projecting what needs to happen in the next quarter and then in the next 6 months and 12 months as well, all at the same time.
When I hear this and listen to this, I just go, when people say, what's the benefit of buying a franchise? To me, having that level of support with someone as invested as you are in your business, supporting you and helping you with the growth, because you both win when you both win. I just think it's magic. It just, if every franchise operated like that, it would be amazing. But yeah, it's just so, like, when you listen to it, you just go, franchising is just amazing. Yeah, thank you. It's very exciting. Venice, what about you? I know like support's a really big thing at Roll. Do you provide a massive amount of support to franchisees?
No, definitely. We do have different types of support actually. First one is actually incentive for our franchise partner to put their hand up to show the interest to become multi-site owners. So we do have incentive to discount on the initial franchise fee, training fee, give them a bit of the waive of royalties and marketing fee the first 3 months for the second site or the third site. We also support them, put up extra fund in the marketing campaigns to make them get started, that we're always there for them. And there's also a level of support of the people who want to become multi-site owners, but they are not ready. So so we build up the plan for them and work together. Like I shared with you earlier, we had one of the franchise partners came to us and he wanted to open a second store badly. And we just look at his all of that approval check and we say, you're not ready. And here's the reason why A, B, C, D. He said, no, I don't agree with that. From my opinion, I have to be owning 2 stores to be successful because of P&L turning like that. And we went against with that idea, and we actually slowly showed him, yes, here's the step by step. If you're not profitable with 1 unit, how could you be profitable with 2? So we support him to build a plan to become a multi-site owner. And once they become a multi-site owner, definitely we do have, like similar with Regan, that we do have similar support like the other franchisee, but a bit extra and a closer eyes on, because they have, more egg in one basket. And definitely we want to make sure it's all successful.
Can I ask you, Venice, do you have a limit to how many one person can own?
There is no official limit at the moment, but the max that our franchise partner could go is 5 stores at the moment. That is showing so far nobody could go up more than 5 stores.
Yeah. Thank you.
Yeah.
Brian, you are on the support side.
Yeah, I'm going to come at it from just a different angle, I think, so hopefully I can give it a little bit of a different perspective. We in terms of our support, we sometimes get a little bit conflicted in our business between supporting the franchisee versus supporting the studio manager or the person who's running the business. So maybe if I just talk about that for a moment, because, ideally, in this structure, we should be supporting the franchisee, who then should be supporting their staff on the ground. But what we've discovered in our network is that some of these franchisees aren't in the business on a day-to-day basis. And so hence supporting the franchisee actually isn't the best thing for the business, because the learnings, the expectations, the processes, the procedures are not being passed down. So we've kind of found a little bit of a hybrid where we don't isolate our multi-sites. So we call them regional franchise managers will get assigned a certain number of territories, and we work off a model, irrespective if they may have, 30 relationships in that network. They could have 10 relationships because there's multi-site owners, but it doesn't change that they work with each studio individually. And ultimately, for us to get the best results for those businesses, it's working with the people who are in their day-to-day. So if that means that the franchisee is sitting alongside you, if that means that you're in there and then you're communicating back to the franchisee, we've kind of really taken that approach of like, let's just make sure that what's meant to happen is happening, and we know that that will be the best outcome for the business. And that's kind of where we've fallen. And we're still iterating and developing and expanding our kind of more formal learning resources. We have onboarding, we've got courses and those sorts of things. But, I think, again, everyone's probably got a pretty good understanding of we're still in that, I still say we're a growth business, we're still in that infancy phase. And so a lot of our things are happening a little bit reactively as opposed to proactively. And I'm sure that will shift for us. But, I think it's just the reality of COVID hangover and that really fast expansion. So
totally. Thank you. Belinda, I'm going to bring you in, of course. Ryan was talking about the need to support the managers and the teams and, this piece of it. Obviously the skills in multi-site as opposed to running a single site are quite unique and different. Can you just share your perspective on, on this area?
I've just been sitting here really enjoying the conversation, Jenny, because we're talking financial viability, we're talking systems and operations, we're talking support for the key people in the organisation and the team at large, which are all vitally important. And I just wanted to share a little story of a client of ours who had been a really majorly successful single site for some years and then bought his second site. And I remember, 12 months on having a conversation with him, and he was just flabbergasted at how much more difficult it was to have a second site than just one site. So his one site was just, to be honest, a breeze for him and he wasn't even there every day. He never ever worked Wednesdays, for instance. But even when he took leave, the team was so well trained and they knew what they were doing so well that I couldn't even tell. Normally, if the owner's not there, the team drops off a little bit, like with what they're actually getting done. I couldn't see a drop off, so they cared about him and he had this really supportive style and he just, kind of brought everyone into a big hug and it was a family, sort of environment. And he bought his second site and tried to do the same thing there. But of course, then he was split across two sites and both sites suffered, which I found fascinating. And about 18 months after buying the second site, he had the opportunity to buy a third site, which he entertained for about a month. And then he came back to me and said, I can't do 3 sites, 2's too hard. And that's because he was lacking things. Like, he certainly had the financial profitability on the both sites, and he did increase the second site, having purchased it. But what he didn't have was the empowerment of the people. He didn't have the processes and systems in place, and he didn't delegate that decision making really well. So, really understanding what your people need, and what support you need to give them, what training you need to give them, what those sort of leadership and management skills are, makes a massive difference.
Thank you. Thanks so much. Yeah, I just think it's such an interesting dynamic that we're all living within. Mel, I'm going to bring you up here. Hi.
Hi, how are you, Jenny?
Good, how are you?
Yeah, fabulous. Hi, everyone. I just had a question. Is there any support or courses out there? Because I'm franchisee, but I also work for corporate, and I mentor and coach our franchisees. So it's a bit, I wear sort of 2 hats. So is there any courses or support that you'd recommend out there for those people that, and not only multi-unit, but also remote? So remote ownership and multi-unit tends to go hand in hand at the moment. I've got a number of agency owners. So we're a recruitment company, and I've got a number of owners that are not only multi, but also remote. So is there anything you'd recommend that I could find to support them out there in courses or literature, of anyone on the panel that has any background in that?
Start this off. Sorry. We actually at the Proven Group have a program called Leading and Managing Teams for Franchisors.
Mm-hmm.
And it's an online program that runs over 10 weeks on 3 hours a week on a Friday. It can be different. So we run a public program and then we run it internally for franchisees as well. We find, there's so much information out there and so much education. There's online courses. We find that leadership and management is about a conversation and learning from each other and going and trying a piece, going into back to your workplace, implementing your skills, and then coming back. So certainly, we've got that on offer. I know, Rold, you've got a very extensive training program. Venice, do you want to share a little bit about that?
Yes, definitely. I think before going to the training stage, the requirement of becoming multi-site owner is also important. There are really no legal requirements about it, but we always suggest our franchise partner who work remotely as well, like myself, because I actually work full-time for Rold support office team.
Right.
I do have partners that works full-time in the business. So the recommendation here is the leader of each of the unit that multi-site owners own, they should have a bit of the skin in the game, either 10%, 20%, 30%, whatever you the franchisee happy to give, but it's just guarantee that they're not gonna walk out from the business the next day. Because I did have experience, not myself though, but one of our franchise partner in the past, she couldn't handle how busy the service was. She really burdened from the business. The store making like 35K per week, and the manager is also like 18 years old, was a very experienced one from McDonald's. Got thrown into Rold, and the manager was busted out, and she actually walked away from the business, from the store during the service at 12:30. Like, I quit, I can't handle this. So it wouldn't happen if your manager or the leader of the store is also own a bit of the share of your business, and that's guaranteed something. That is one of my recommendations.
That's amazing. Thank you. Thank you. Yeah, it's such a multifaceted piece, isn't it? It's such a a big one. Thanks, Mel, for the question. Vanessa, I'm going to bring you up here.
Hi, Jenny. How are you, everyone? My question is, how much is multi-site a conscious part of your strategy versus getting a new franchise in, or has multi-site been something that's happened a bit more organically for you?
Great question.
I can kick that off if you like. I think that's interesting. We've had that discussion on and off over the years. I think for us, it is an important part of our growth, but because of how what we know works for us, it's not the main part. So we have to, there is that organic growth that comes from it. We're actually doing the programs to try and support that multi-unit growth within, but equally important is about attracting new franchisees into our network as well. So I think it's about getting the balance right for your particular franchise system. For us, like I said before, we're about 35% multi-unit franchisees, which is probably right for us around that number. So it is equally important for us to attract new ones and grow from within.
Thanks, Regan. Does anyone else have anything to add there? Kevin, how would you rate the split between your focus on multi-site and single site?
Yeah, I'm just trying to get the updated numbers, obviously, at the moment. So we do have 15 franchise partners, and out of those 15, 15 multi-unit franchise partners, out of those 15, they have about nearly 50% of the network. But then again, obviously, we're also on a growth strategy whereby which we need to make sure we look after them from a financial standpoint and an operational standpoint. So we have enacted, obviously, marketing to ensure that we can bring on new blood into the system as well. So at the moment, we're averaging about 100 to 150 new inquiries a month for our business, which is taking a lot of time to actually go through, to actually dwindle down, to make sure we're bringing in the right franchise partners into the business as well. And look, they typically, when, you know, as part of their approval process, when they come in, before they are even approved, they need to still do a business case, a business plan and a cash flow forecast based on indicative numbers on the site that they're looking at wanting to go into. And give them all of those figures, and then they work with their accountant and they present that through to us. And if it all marries up to the modelling that we have, then obviously we then look to get them in to get final approvals through the executive team that way too.
So do you, out of interest, do you generally have a site first and the franchisee second, or are you kind of doing both things at the same time? So you're finding the right
Correct.
partners. Yeah.
Correct. Exactly right. So just to give you an idea, at the moment, we have about 40 new franchise partners who have deposits down, awaiting on sites at the moment, but not enough properties. So a lot of those guys are working with the leasing and property teams to actually find suitable locations based on demographic and geotech data that we've paid for, and then based on that, determining the metrics based on the store cost builds and the projected sales will ultimately determine whether those sites are viable opportunities for a franchise partner to be presented with.
Vanessa, I think Kevin was just talking your language.
Yes, definitely, absolutely. And it's always, we do see that a bit. Do you get the franchisee first, the territory first, or the site first, or a combination of all? So
thank you. Thanks, Vanessa.
Thank you.
Can I just share quickly? So
yes,
BFT is franchise first, and then it's their responsibility to find a site. And so I was about to say, like, Kevin, to hear that you've got 40 sitting there, I mean, I think, you know, in our business, it is by far the most challenging part of the whole process. Once you've got the site, I believe, the rest of it is relatively easy, but, finding suitable property that fits from a profitability perspective that's suitable is by far, is the most challenging.
Really interesting. Thank you. I might get everyone just to share one last little takeaway nugget. And then we'll wrap up. I really appreciate everyone's engagement today and, people asking questions and talking in the chat and so forth. Regan, have you got something you want to share?
Oh, you're putting me on the spot. Yes, I do. I think things will, we spoke about last time and briefly today, things will go wrong, things won't work out. But for us, we really take the time to sit down afterwards and do a debrief and really pull it apart and understand. So I think take the time to see when things don't go right, what happened. And we've had a lot of learnings because we actually have started to do that, where before I think it was, you might just shove it under the carpet and keep going, but take the time, pull it apart with your team, understand what worked, what didn't, and make change, when you need to make change. Yeah.
I think that it's critical to have a culture of continuous improvement. And I think for businesses, I suppose we're living in a slightly different economic time now as well. I think, it's just so critical to be asking what's worked and we can amplify, what hasn't worked and we need to refine. I love that. Ryan, I'm going to go to you this time.
Oh, yeah, my probably takeaway for where we're at the moment is put multi-sites or put new sites in the hands of your proven operators. I think is probably my key takeaway at the moment is, I'd love to shift probably some of our underperforming and let's be honest, I think everybody on the call would, appreciate we've probably got some franchisees that we probably don't want, need, shouldn't have snuck through. And so, how do we, move them out of the business and put, their business that can perform well into the hands of somebody that will operate it well.
Yeah, definitely. And I think also, that's a little bit of a young franchise group situation as well. Over time, hopefully that will be a less of a situation. Yeah. Evan, what about you?
Look, I think, with anything, the systems and processes are key to any franchise system. Ensuring that, that they're looking after their franchise partners and reducing risk. You can never obviously get away with or mitigate risk too much in franchising, but more that you can actually help the franchise partners and to reduce the risk and help them grow their business, and obviously in turn, you know, the franchisor grows on its own. It's very much key to everything, I guess.
Yeah, love it. Thank you. Venice.
I definitely want to vouch for communications, like what Belinda say, with the departments, from role perspective, definitely operations is best friend, but find your best friend and then keep in touch with them on a daily basis. Communication with the franchise partners as well. If they are not ready, explain to them why you're not ready, and here's a plan for you if you still intend to do it. And that's definitely communication will lead to the collaboration.
Thank you. Thanks everyone for joining us. I will be sending out a recording to everyone. Thanks Regan, Kevin, Ryan and Venice for being on the panel. You provided so many insights, really, really valuable. Thanks to everyone for coming on and participating, and look forward to seeing you all soon.
Thanks everybody. Have a great day.